The week was so crazy that even ChatGPT couldn't even select a title for this video. She gave two options: stock market crash or a buying opportunity. Trump, Bitcoin, and Meta shake things up. And the other one is Trump and Bitcoin, 24/7 trading, and Meta's $200 billion AI bet. Market in trouble? ? So hello everyone, my name is Micha Stocks, and on this channel we talk about the market, we summarize the week. Let's directly dive in, and we will dive in through our YouTube channel, which is now almost 6,000 subscribers. You're more than welcome to subscribe to the channel. Of course, smash the like button if you like what you see, so you can be notified every week when there is a weekly summary for what's happening. And diving in directly to the major averages. This is how they ended the week, and yes, it was a horrible week. The Russell 2000 went down 4%. Nasdaq 100 went down 3.2%. The S&P down 3.1%. Dow Jones down 2.3%. And the RSP, equal weighted S&P, down almost 2%. This brings the major averages, S&P and Nasdaq, to be negative for the week. When we look at the indices themselves, the only sector that ended on the green was healthcare. Yes, we needed some healthcare after this week. XLF, which is the financials, down 5.8%. One of the best performing sectors since beginning of the year, got hit last week after they went after the technology and communication. They now went after the financials. Consumer discretionary down 4.7% and energy down 3.92%. This, of course, brings us to the crypto market with a lot of news coming out of Washington, and we're going to talk about them. Bitcoin ends the week, or up until the point where I ran the chart, positive by 1%. Ethereum is positive by almost 3%, but didn't give us the safe haven that we were looking for. Natural gas up 13.9%, while gold and silver up between 1.3 and 2.6, and crude oil down 4.3%. When we look at the Magnificent Seven, the Major Eight, I don't know the new acronym, when I added Broadcom inside, you can see that only Google ended the week green, plus 2.2%, while all the rest between 0.9 by Microsoft, 1% down by Apple, Broadcom down 2.2%, and this after Friday, which was a double-digit gain after their earnings report. Amazon down 6%, Meta down 6%, Nvidia down 9%, and Tesla down over 10% for the week. Now let's dive in directly to the news, and we will start with the news that came in Friday. The S&P 500 is rebalancing. In the next 2 weeks, the following stocks will enter the S&P, while others would leave the S&P. We're talking S&P 500, not the whole, not the stock market, of course. Additions to S&P: DoorDash, TKO Group, Williams-Sonoma, and Expand Energy. Their tickers are Dash, TKO, WSM, and EXE. While Borg Warner, Teleflex, Solance, and FMC Corp leave the S&P 500. Tickers are BWA, TFX, CE, and FMC. And I got to tell you, with over 3,000 videos on my Hebrew channel, I don't think I've ever heard about these four companies, and they are in the S&P 500. Other index changes: so Palantir enters the S&P 100, Intuitive Surgical as well, and ServiceNow also. In the mid-cap, there were also several changes. You can see them here: additions and subtractions to the major averages. Also on Friday, we had the first White House Crypto Summit. It's the first time that a major, let's call it, country created or sat down with all the top crypto executives and talked about how to embrace crypto, how to regulate it, but not from a criminal point of view, but actually from a forthcoming point of view. This was a huge and major achievement. They didn't, or at least the US didn't say we're going to buy more Bitcoins or anything like that, but there was a very good discussion and openness from the government. What Donald Trump did sign on Thursday is an executive order that's establishing the strategic Bitcoin reserve, with the first 220,000 Bitcoins would be Bitcoins that were sieged from illegal activities, whether it's terrorists or money laundering or other illegal operations. In this chart, you can see that we are right now one of the most extreme oversold signals in history. The situation is so bad that everyone is looking for that bounce after a very, very, very large amount of downward pressure in the last few weeks. Hopefully it will be next week. This is the chart of Atlanta Fed GDP now. Atlanta Fed issues an update that the US GDP falls from around 2.3% all the way down to minus 2.8%. Why did this happen and why did we see this rapid fall? First of all, have we ever seen it in the past? The answer is yes, during COVID and other times of distress. Why did we see it now? And I'm saying why did we see it now while I'm supported by an update from Atlanta Fed, which is very, very not as usual. They updated why everything went haywire. There were several reasons for that. Reason number one, tariffs. Companies or producers, and we will see it on the PPI, knew that there are going to be tariffs coming in March. What did they do? And tariffs coming from Mexico and Canada. Since Mexico and Canada are top 3 importers and exporters to the US, those producers ordered in advance and paid in advance and had more inventory in advance just to overcome those tariffs. That automatically, those inventories, reduces the GDP in a dramatic way. That's one. 2, we have a tick in unemployment in Washington, about 3 times the amount of the usual amount, whether it's due to Doge or other areas. And the third reason is there's a shift or movement of gold from the London Stock Exchange to US Stock Exchange. I have no idea why, but those are the 3 reasons that the Atlanta Fed GDP is now focusing on and saying those were the reasons. And after updating the numbers, GDP now is tracking 0.4% rather than the numbers we saw before. Fed President Jerome Powell talked on Friday at the New York Economic Forum and said that there's a lot of uncertainty around Trump administration policies, which everyone knows. And of course, the Fed does not need to be in a hurry to adjust interest rate. They're not going to try to predict how the markets are going to react to Trump. They're going to let the game play out. We also got another bearish AAII reading this week. The American Association of Individual Investors came in again at 57.1% bearish. Very, very, very bearish for the investors. And why is that? Because we see a lot of red days. So everyone's bearish. Trump also addressed the Congress and the House this week. Over 90 minutes of speech where we didn't hear something we didn't know, so there wasn't any hot takes from that discussion. A lot of clapping, a lot of rhetoric between Democrats and Republicans, and basically saying what we all know, his campaign plans. Microsoft has created an in-house artificial intelligence. They believe that they can go toe-to-toe with OpenAI. That's very good for Microsoft if they can reduce their reliance on OpenAI. Palantir delivered their first Titan mobile battle station, actually 2 of them, to the US Army. If you don't know what is the Titan station is a cabin where soldiers, or actually, let's call them commanders or someone else, can gather all the information from the battlefield using AI to generate better combat capabilities or something in that manner. US is probably going to ban DeepSeek from the app stores. Nasdaq is going to start trading 24/5. Probably in the next few weeks or few months, the Nasdaq is more than considering 24 hours of trading. India has agreed to cut tariffs way down due to Trump's pressure. Trump is going to have reciprocal tariffs on Canada, probably Monday or Tuesday. Treasury Secretary Bassett says that economy could be starting to roll over a bit, and that is, of course, not a good sign for the markets themselves, but have the markets already priced that in? We don't know yet. We will see. President Putin, Russian president, reportedly agrees to a truce with Ukraine, but he has his own conditions. And the conditions might be, I don't want to see Ukrainians anymore. European equities saw a 4-week inflow that they haven't seen since August 2015. A total of $12 billion of inflow, and those are people who ran away from the S&P 500 because they wanted to save money. I don't know. They wanted not to be damaged by the Trump trade. Walgreens is going to become private for a $10 billion deal. That would be around 11.4, if I'm not mistaken, dollar per share. Lunar failed on their mission to reach space, and their land cruiser is not going to get to the surface of the moon. OpenAI and Oracle secure 80,000 NVIDIA chips in order to build what they promised would be the AI infrastructure for Stargate. Walmart asked their Chinese co-partners to reduce the cost, because if they need to roll the tariffs over to their consumers, they would like both sides to reduce cost. Google Cloud unveils an AI-powered weather prediction. They're going to sell it to mainly energy companies, but others that would like a better forecast for weather. Sundar Pichai, Google CEO, updates that Gemini 2.0 is going to power responses for coding, advanced math, and multimodal queries in the US. They're going to incorporate that into search mode, so you would not need a particular app in order to run AI. Disney is cutting around 6% of their staff. A very unique purchase by Stefan Benzel, Moderna's CEO, which hasn't acquired their own stock for over a year and a half, and now he's acquiring more than $5 million. What does he know that we don't? AppLovin is in talks to sell their gaming unit for $900 million. Novo Nordisk is going direct to consumer with their Wegovy drug, which is a weight loss drug. Instead of it costing around $1,200 per month, it's going to be reduced to $500. It has a vial. It's not an automatic kind of injection, but it's half the price. So it might be a good deal for who uses that. Meta plans a massive AI data center around $200 billion and a new chatbot push. They feel that no one is considering them in the AI race, although they have a very powerful model. Goldman Sachs is going to target vice president for their next round of layoffs. Apple unveils new iPad, new computers, not new actually, but updated with new hardware of computers. Faster, stronger, nothing new basically. And this is very interesting. T-Mobile and Perplexity started to make their new AI phone, a phone that does not need all the apps. You can run Perplexity and that runs the apps for you, and you can basically talk to the phone, let the phone have AI agents inside. Very, very interesting. Waymo and Uber launch autonomous rides in Austin. And this is after Waymo reported 200,000 drives a week in the locations that they operate. Amazon is building a new reasoning AI model. Again, everyone has their own, except Apple, which is delaying their personalized version of Siri. The cadence and the speed of work in Apple is very, very disappointing. Very disappointing. With the amount of money that they have, with the amount of headcount that they have, it seems like something is very rotten in the Apple ecosystem. Amazon is planning to spend invest $8 billion in India to grow their cloud data center in the region. And we talked about Microsoft before. That brings us to next week. First of all, everyone's waiting for a bounce. What would be the news that would generate that? No one really knows. During Friday, we saw the turnaround going up, and we ended at least Friday on the green side. Most of the earnings are behind us. We're already at the middle of March, with April, again, starting earnings season. What we will get reports from is Oracle on Monday or after the bell. Tuesday, we have a few retailers, Kohl's, Dick's, and others. Wednesday, we're going to hear from iRobot, Zim, Shipping, and others. And after the bell, Adobe and UiPath, Sentinel-1 from the cyber perspective. Thursday, we're going to hear from Dollar General, DocuSign, and Alta Beauty. When we look at the macro headlines, or at least the macro schedule, we get CPI on Wednesday and PPI on Thursday. CPI consensus is around 2.2, previous was 3%, and PPI is 3.6. That brings us directly to the S&P 500, and as you remember, we look at it from a Japanese candlestick point of view. During the week, both Thursday and Friday, we punctured through the 200-day moving average. We did not close under, but we punctured through it. No doubt there is technical damage that has been done. Technical damage means that more likely that we will not run all the way to 7,000 from here. There will be some kind of bounces and corrections and bounces and corrections. The lowest that we got on Friday on the S&P 500 was 5666. This is, of course, the line in the sand, because if we drop lower, it means that we are going down even further and probably going to close underneath the 200-day moving average. You can see that Thursday we closed on the 200-day moving average. We did not close underneath it even now. The last time we closed underneath the 200-day moving average was in November 2023. This, of course, was the launch of the rally, and we all know how that ended. Will it be the same? Very good question, no answer, and of course we won't know if we had our bottom only a few weeks later, when we will not come back to test that bottom. What we do know is we have 59.23 as resistance. We have support, as I mentioned, around 56.60, and that's currently where we are. Probably we will see a bounce around 59, maybe even to try to overcome 6,000. That would be a stretch for this market, but you never know. We're so bearish that any good news might be so good for a run. We will see during the week, and of course we will talk about it next week on our weekly summary. Thank you very much for being here. I'm Micha Stocks. You can smash that like button if you haven't so far. Till next time, bye-bye.